Hey friends, Senate Eskridge here. Welcome back to day 3 of my 7-day passive real estate investing course. I'm so excited to have you here with me today. Now, today I want to cover a few of the most popular asset classes people like you invest in. The first one, I want to talk about single family rentals here for just a quick second. You know, buying a single family rental is a very common first step for active investors. You know, they buy a house for say 250,000, maybe 300,000, and they put somewhere between 25 and 30% down. They come up with 50 to $75,000. You know, not bad to get started, but I want you to keep in mind you can get into a syndication, one of the bigger deals I'm going to talk about in just a minute, for the same amount down. You know, these single family rentals, they have several advantages. One of the biggest ones is there's a lot of market demand. You know, you can buy and sell a single family house fairly easy most of the time. You know, that does can be controlled by the market. There are ups and downs that they sometimes they take a little longer to sell or less, but for the most part, you can sell them in and out pretty easy. But they do have some other problems. First of all, they're not scalable. You know, at one point, I've done over 100 single family transactions, and it was a full time job to invest in single family houses. They also have vacancy risk. You know, I think there's nothing riskier than one single family rental because if it's ever empty or vacant, you make no money, but you still have to pay all of the expenses. Plus, they average about $100 to $200 a month in cash flow. And if you ever have a major repair, you know, big hot water heater or furnace, air conditioner, water main, it can eat up a year or 2 years of profit really, really quickly. So, single family rentals, they have pros and they have cons. It's worth looking at, but I highly recommend looking at some of these other asset classes as well. One of my favorites is multifamily, where you have multiple houses all in one. Let's say 10 or 20 or 30, maybe even 100 units all in one space. And each size has its own pros and cons. You know, once you get to up to about 50 units, it really allows for a centralized management, someone on site that can be dedicated to taking care of the property on a day to day basis. Once you get over the 75 mark, maybe closer to 100, you can have not only a full site property manager, but you can have a full time maintenance man that works for the property all the time. You know, he works 40 hours a week just taking care of everything. Really adds for the economies of scale. Also, they have great resilience in the downturn. You know, if people leave the house, they're going to go to an apartment. And, you know, so like back in 2008, we didn't really see a lot of dips in apartment rents because people were losing their houses and leaving and coming into apartments. So it's pretty secure in there. Another thing I really like is the valuation is based on income rather than comps. Going back to a single family house, you know, if the neighbor down the street's house sells for more or less, it'll impact the value of your house. That really doesn't happen in apartments. It's all based on the valuation. The valuation's all based on the income. Let me give you a quick example. I have a 33 unit apartment building that we own that had internet issues. All of the residents complained, couldn't get good internet, and there was big problems. And so what my partners and I decided to do was to bring in one big internet fiber optic line and distribute that across all of our residents. Now, we had to pay about 10, 13,000, somewhere in that range to get this all put in. But then we were able to charge $50 a month per resident for this access. So if you take $33 times $50 a month, that comes out to just under $20,000 a year in profit that we were able to make. Our residents were happier, they had better service, they paid less money, and they were happier, as I mentioned. This added almost $400,000 in value to our community. So, because we make a little investment, boost the income, it really drives up the value. But getting into one of these things is not easy. Going and buying a 5, 10, $15 million apartment building is a big challenge, and it takes a lot of capital. So getting into it on your own is difficult, but that's why we syndicate. We give people just like you the access to get into these, for $50, $75, $100,000, whatever it is that you're looking to invest. They're also very complex. Managing a single family rental and managing a 64 unit or 100 unit building is very different. So you have to have professional management. Next, I'm going to go through the rest of these pretty quick. Next is mobile home parks, where you have a bunch of manufactured homes all in one property. You own the land, the residents own the buildings. These are really have a lot of advantage because they have very low turnover. It's hard to move one of these things, right? Very high demand because affordable housing is scarce. But they have perception challenges. Nobody wants to live in a trailer park. Nobody wants to own a trailer park. The goal for us when we look at these is we want clean, safe, well-maintained communities without those stereotypes. They're also very complex. The management is totally different. And again, another reason to work with a professional team of general partners rather than trying to do something like this on your own. Next, I want to talk quickly about self-storage. Self-storage has a lot of advantages. It's recession resistant. Again, when there's a downturn, people have to go into smaller properties and smaller places to live, but they have all of this stuff and they don't want to get rid of it. So they put it into storage. They have very low maintenance costs. They don't have residents. They don't have issues like plumbing and HVAC. So they're really easy to maintain. But the challenges are, a lot of these areas have been overbuilt because it's such a great investment. People build all of these things and cause saturation. So you really got to know which markets to invest in and which ones not to invest in. They're also very vulnerable to location issues, things being built around them. And, so you really have to have professional general partners that understand self-storage to make sure that you're putting the investments in the right place. All right. Oil and gas, another great investment. You can actually buy your own oil wells and invest, right? And again, very expensive to get into if you're doing it on your own. Also very complicated to maintain and to manage and make sure you're buying the right investments. So it's very important that you work with general partners that understand this. But when you have these go right, they've got extremely high earning potential and you can make a ton of money on these. And they also have great tax advantages, which is a very unique thing to oil and gas, which I'd love to talk to you more about. But they're subject to market volatility. Oil prices go up and down, environmental risks, political risks. So you've got to make sure that the team of people you're working with are really professional in this. All right, next one I want to talk about real quick is debt funds, where you invest into a pool of money with multiple other people that invest, and then the debt fund lends money to other people. These are really great if you're looking for predictable income, interest payments that provide steady cash flow over time. Their risks are lower in these than some of these other investments because if it's structured properly, your investment isn't tied to just one property or to one investment. It's actually spread across multiple different loans. So imagine if you invest $100,000 and, every 1,000 of that goes out to 100 different people. And so you're collecting interest across all of them. So if there's ever a challenge with one of those loans, it doesn't impact your returns very much. And again, setting all of these up are a big challenge. So you really need to work with somebody that knows what they're doing. All right, the last one I want to talk to you about is private equity or businesses. Actually going out and buying a business and having that be ran on a day-to-day basis. These have extremely high growth potential. You can see 4x your money, 5x your money. I've heard of some that are even 10x your money, huge returns. And you can have great diversification, right? You could buy a business in, say, paving. You could buy a business in, say, trash. You could buy a business in, oil and gas services, things of that nature. But you have to figure out how to run them and manage them. And so again, I know I've beat this drum several times on this video, but having a professional team that can manage this and knows what they're doing on a day-to-day basis is extremely important. So we covered several of these. Let me know if you want to talk more about any of these in detail. I'd be happy to answer any questions you have. And I look forward to seeing you tomorrow. We're going to talk about evaluating markets and market analysis.